let's say you have a loan on a boat and you have a mortgage on a house. Can you consolidate the two loans together into one?
Yep. So with a cash out refinance, you can do whatever you want with the money as long as you've got the equity there. So when I pull your credit report, I'm going to see your mortgage, your Capital One credit card, your Bank of America credit card, maybe your car loan with Chrysler Financial, and your boat loan.
Okay, so it'd be considered a cash out refinance. So you'd be using the equity that you have in the house to pay for the boat.
Yes.
And then, okay.
So then at closing, we're going to say, okay, get payoff statements for your car, for your boat, for your credit card, if that's your goal, to pay everything off and have one payment. And you get account statements or payoff statements. And at closing, we cut checks. We say Chrysler Capital, $34,000. Student loans, $12,000. You know.
Right.
So that's one option to do it. But I always have the conversation with people. Does that make sense? Right now, if you keep doing what you're doing on your car loan, you'll be paid off in 5 years. If we wrap that into your mortgage because you're drowning in debt, you're technically taking that $30,000 instead of being done in 5 years, you're putting it on a 30-year loan.
Right.
So it's costing you a lot more. For some people, they're in dire needs, and that's just what they've got to do.
Or if the rate's super good at the time.
Correct. Like if we're 3 years ago and it's 3% rate, you know, car loans were low as well at that point, but for whatever reason, maybe it wasn't. You know, that could make sense too.
Right. Can we walk through kind of like a step-by-step process of if somebody comes due and is looking to buy a house, kind of what they go through?
Yeah. So come to me first. A lot of people, they window shop, they look on Zillow, they fall in love with properties, and they say, Tony, we love this one. I want to buy it. That puts the pressure on me that I've got to get everything done basically that day because houses aren't on the market long. And it's a tough conversation if you fall in love with a house and then I'd say I can't get you approved for it because it's out of budget.
Right.
So come to me first and we'll have a conversation around, you know, have you been looking online? What have you been falling in love with? Has it been 350 or 600,000? What's that? What houses can you see yourself living in?
Yeah.
And then let's talk about the payment that comes with that. And then A, are you comfortable with it? And B, do you want it for your mortgage payment? So I like to meet with clients first and just have those conversations, and because you don't think about it unless someone brings it up.
Right.
So I'm going to say, hey, let's look at the big picture here.